this up. Last year, the SEC, Securities Exchange Commission, changed the rules on money market funds and said they can suspend redemptions, just like a hedge fund. So people today, they've got money in money market funds. They think they have money. They say, well, I can call my broker, sell my shares, the money will be in my account tomorrow. The money market funds now have the ability in a financial crisis to say, sorry, you can't sell your shares. We are suspending redemptions. So you're not going to be able to get that money. They can reprogram the ATMs to allow you $300 a day for gas and groceries, no more. So it doesn't matter if you have $100,000 in the bank. You can only get $300 a day for gas and groceries. And they'll say, why do you need more than that? They're going to close the New York Stock Exchange. When I say things like this, Rick, people say, oh, that would never happen. You know what? The New York Stock Exchange was closed for 5 months, from July to December 1914. 5 months, the New York Stock Exchange was closed. New York Stock Exchange was closed in Hurricane Sandy. It was closed after 9/11. It happens all the time. So when people say these things will never happen, they're in denial. They have happened. They'll happen again. In 1933, Franklin Roosevelt, by executive order, closed every bank in America. There was no legislation. Just by executive order, he shut every bank in America. They opened 8 days later, but people didn't know that at the time. They didn't know how long the banks were going to be closed. So stock exchanges are shut down. Banks have been closed. Look at what happened in Cyprus. Look at what happened in Greece with reprogramming the ATMs. Look what happened in Bangladesh. Every one of the things I'm talking about, this is not science fiction. They're happening. They have happened. They will happen again. But when that happens, I would expect money rise. People are going to go burn down banks. And, there'll be kind of vigilantism, and then the response to that will be a neo-fascist response. It'll be, either martial law or National Guards. We have National Guards in the streets of Washington, D.C. In 1968, 1970, 1971, so it'll happen again.
Jim, what about oil? In recent weeks, there's been an attempt to bring about a rally in price of oil, but I'm not sure it can be sustained. The world is still awash in petroleum. What do you see for the remainder of this year and going into 2017 with oil?
Well, it's a lot like gold. It sort of depends on what the Federal Reserve is doing with interest rates and inflation and deflation. Now, if you think money is manipulated, which it is, and markets are manipulated, which they are, boy, is the price of oil manipulated. Look, Saudi Arabia can make the price of oil whatever they want. They have the largest reserves in the world and the lowest cost of production. It costs them about $3 a barrel. So as low as $4 a barrel, I'm not saying oil is going to go to $4, but what I am saying is that oil could be $4 or $5 a barrel, and Saudi Arabia would still make a profit and still have the world's largest oil reserves. So if they want to shut the taps, the price will go up. If they want to open the taps, the price will go down. So they can set the price of oil pretty much anywhere they want. So where do they want the price of oil to be? They want it to be low enough to destroy the fracking industry. That's about $60 a barrel, but not too low because they don't want to run a budget deficit. They actually need the revenue to pay all these 50% of the people in Saudi Arabia work for the government. They got a big payroll to meet, not to mention the princes and all allowances and all that stuff. So
and they have to finance jihad around the world too.
Jihad and also weapons purchases to confront Iran. And if Iran gets a nuke, they're going to buy nuclear weapons from Pakistan. So yeah, they got a big budget, a long shopping list of weapons and jihadists and other things going on. So for Saudi Arabia, they don't want it to be more than $60 a barrel, but they'd like it to be, at least kind of 40, 50. The problem is it overshot, and Iranian oil came back online. Iraqi oil is coming back online. I'm not an oil expert, Rick. I'm a monetary expert and a global macroeconomist, but of course I follow the oil market. But look, let's just look back to Janet Yellen. If she cheapens the dollar price of oil is going to go up. If she tightens and strengthens the dollar dollar price of oil could very well go down. So once again, oil is oil, gold is gold. The dollar price of oil or gold really depends on the value of the dollar. And if we see the dollar going down, which it looks like it's heading that way right now, then the price of oil will go up at least a little bit. But then Saudi Arabia will jump in and not let it go up too much. So again, it's all manipulated. I see oil trading in a range. Probably the range is 30 at the low end, 60 at the high end. It'll fluctuate in that range, but it'll trend a little bit higher if the dollar cheapens. But if the Fed goes back to raising interest rates, which they might later this year, then it could very well go down. So I guess volatility is the watchword.
But at the end of the day, an estimated 30 to 50% of the U.S. energy corporations are teetering on bankruptcy.
Well, that's right, and they are going bankrupt. This really hit them in late 2014, early 2015, but that doesn't mean you go bankrupt the next day. Because what they started doing, they started pumping more. Even though it was non-economic, they said, well, they stopped drilling new wells. Okay, so that the new wells dried up completely, and they laid off people and stopped buying pipe and renting drills and equipment and all this stuff they needed to do new wells because the new wells were non-economic. But the existing wells were still there. Those are sunk costs. They already spent that money, so they just started pumping them like crazy. And the result was that they actually was an oil glut that drove the price down more. That gave them a little bit of cash flow to pay the principal and interest, but fracked wells actually have a shorter life than conventional wells. So those wells are already drying up. They're running out of cash. The price of oil went even lower than they thought. They need $60 or $70 a barrel, as I mentioned, just to break even. So for all those reasons, those companies, and by the way, they were highly leveraged. Where did all this fracked oil come from? Where did all this equipment come from? All these pipes and rigs and labor and all this stuff. Well, the answer is they borrowed the money. They borrowed trillions of dollars. So right now we're looking at the bankruptcy of these companies, trillions of dollars of defaults on the debt. Again, that's a further drag on the economy, losses for investors' portfolio. To me, it's just one more reason to have some gold in the mix. And again, I talk about that in my book, The New Case for Gold.
All right, final question. When I get my copy of The New Case for Gold, what am I going to learn?
Well, you're going to learn a lot. Chapter 1 has something that I've never seen. I researched it and discovered it and put it in the book, but I've never seen it anywhere before. I've never heard any analyst talk about it. I've never seen it discussed, described, or whatever. I think I've unlocked the key to why the U.S. Treasury cannot sell more gold. In 1950, we had 20,000 tons of gold in the United States. In 1970, we had 9,000 tons of gold. We lost 11,000 tons of gold to our trading partners under Bretton Woods. By 1980, we were down to 8,000 tons of gold. We dumped another 1,000 tons of gold on the market in the late 70s to suppress the price. But since 1980, we've stayed right about at that 8,000-ton level. The U.S. stopped selling significant amounts of gold in 1980, right at the 8,000-ton level. That's how much we have today, 35 years later. Why is that? Well, the answer is that money is needed to prop up the Federal Reserve. And nobody thinks we're on the gold standard. I have news for you. We are on a shadow gold standard that nobody talks about. That means the U.S. cannot sell gold, cannot suppress the price except through paper transactions. We got the Brits to sell most of their gold in 1999. We got the Swiss to sell thousands of tons of their gold in the early 2000s. Port Canada sold the last of its gold. They didn't have a lot, but they now have zero gold, the only major developed country to have zero gold. We got the IMF to sell 400 tons in 2010. So the U.S. is running around getting everyone else to sell their gold. Why doesn't the U.S. sell gold? Because that gold is needed to prop up the Fed. And I explain this in detail in Chapter 1 of the book.
Yeah, it's really scary when I can say that I own more gold than the Central Bank of Canada.
You do, and so do I.
Amazing. All right, the book is The New Case for Gold. It is available right now for pre-order. It's going to be released next Tuesday, April 5th. The author is James Rickards. Thank you, Jim. Appreciate you being here.
Thanks, Rick.
Well, let's take a short break, and when I come back, Edward Zoll and Terry Sacka will be here. We're going to have a discussion, a follow-up discussion on some of the amazing things we just heard in this first half of True News from James Rickards. So don't go away. I'll be back in a minute.
You're listening to True News, the end-time newscast. Rick will return after this announcement.
New scientific research has revealed the damaging effects that pornography has on the brain. The shocking brain scans of a heroin addict and a guy hooked on porn show they're nearly identical. A new 6-disc film series teaches men biblical strategies to find freedom through the renewal of the mind. Order it online at conquerseries.com. Hundreds of thousands of men are finding freedom from porn through the powerful strategies taught in the Conquer series. Get the 6-disc DVD set for you and your church men's group at conquerseries.com.
Reporting the countdown to the second coming of Jesus Christ, you're listening to True News, the End Time Newscast.
Well, welcome back to True News. I'm Rick Wiles. We just heard a powerful interview with financial analyst and Wall Street insider James Rickards. He's got a brand new book coming out next week called The New Case for Gold. And many of you know him from his earlier book, The End of Money and Currency Wars. He's been on True News many times over the years, and we have relied upon him throughout the years to have an insider analysis about what is taking place on the global scale in the remodeling of the global financial structure. Because, folks, that's what's happening. The entire global financial structure is being remodeled, remade, and it's going to affect you and me, and it's going to affect the way ministry is financed and the gospel is funded. That's my interest in this, because the gospel will go out in all the world, and God will override whatever man is doing. You know, the Lord will have wealth will be like water flowing, and it will get to the churches and the ministries that are preaching the gospel, regardless of what kind of system mankind sets up. But a new financial architecture is being made, and we have been reporting on this for over 10 years. Terry Sacka from Cornerstone Asset Metals is here, and Edward Zoll is in the studio. Gentlemen, both of you, I want to ask each of you, what was the highlight of Jim Rickards' remarks? I'm going to start with you, Terry. What did you hear that really stood out?
Well, going to your initial premise that the object of protecting and preserving the kingdom's assets is to allow us to continue to communicate and to not only spread the gospel, but to keep us informed. And when he said that the money market funds can suspend your ability to withdraw, let alone place redemption restrictions, I found that really telling, because that's exactly what we were talking about, where a lot of us believe our money is safe in the bank or in the brokerage, and if they pull a redemption or a suspension on our ability, and then the MF Global case that came out that declared your money in the bank isn't yours, it's actually a loan to the brokerage or the bank, that's why they pay you this pittance of an interest, then you don't have any place to stand because you're third in line for repayment. Now, if we in the kingdom are trying to protect our assets, but most of them are in the wrong place, are we really going to be protected then? And then how are we going to continue the mission?
Edward, how about you? What was the most stunning thing you heard?
I think the most stunning statement that came out of that interview was that the SDR, the standard deposit rights, would replace the dollar as the world reserve currency.
Now, the SDR, it's special drawing rights.
Special drawing rights.
Special drawing rights. And this has been the plan for decades. I've mentioned this in previous programs. One of the earliest memories I have as a new Christian, and I was saved in 1978, and I recall watching these interviews with Jim Baker when he had the PTL Club. And I'm sure I saw it on the 700 Club with Pat Robertson. But there was a Christian financial expert and author. His name was Willard Canelon. And Brother Canelon has gone home to be with the Lord years ago. He was in his 90s when he passed away. But he wrote several books. His first book was The Day the Dollar Died. And he wrote this book in the late 70s. And he said the dollar is going to be killed. And he said he was told that it would be replaced by the special drawing rights. This is in his book in the 70s. He said he was told by a high-level official in the IMF that the special drawing rights would replace the U.S. dollar. And so Willard Cantillon wrote that book in the late 70s, the day the dollar died.